Alright guys, here we go with the accounting unit. Sorry I can't be with you guys today, but I'm going to go run through this real quick, then I'll show you guys a little bit about the assignment so that it'll make a little bit more sense. Alright, that's what accounting is: systematic process of recording and reporting financial position of a person or an organization. And this basically tells whether a company is doing well or doing bad during any particular time, whether it's a quarter, whether it is on an annual report, whether it is monthly or weekly statement of cash flows, so on and so forth. Feel free to stop this and continue any of the notes that you need to. GAAP are the rules that accountants need to follow, and what that does is that helps actually two different companies, especially if you go to investing and you start looking at those statement of cash flows, income statements, liability statements, so on and so forth. It's going to allow you to compare apples to apples with these principles. 5 assets of a t-shirt business. Some of those could be basically anything that you own and that holds value. So that could be a t-shirt press, that could be actual t-shirts, which would be your inventory. It could be a computer, it could be an iPad, it could be shelving, could be the prints that you use to put onto the t-shirts, lots of different t-shirt printers, so on and so forth. Anything that you might actually use, a delivery truck, any of that type of stuff. Cash would also be an asset. You should have some cash if you want to run a business. Liabilities are debts of the company. So this could be if I did buy, let's say, $5,000 worth of inventory for my t-shirt company, and I haven't paid that bill yet, that would be a liability. So that could be a debt to a vendor. Could also be a loan that I took out to start the business. So maybe I took out a $25,000 loan to start the business, and that could be my other liability. That's known as accounts payable, money that we pay to other businesses or other individuals. Equity is the owner's claim to the assets. Obviously, the creditor's claim to the asset is going to be liability, but the owner's claim to the asset is the owner's equity. There's the accounting equation, and the biggest thing about this accounting equation is that it must always equal. If we add assets and we don't take on any debt, then that is definitely going to affect owner's equity. So know that it's an equation, just like math class. If you add something on one side of the equal sign and it is not subtracted out, then it's going to be added to the other side of the equal sign. Cash flow is the money that is coming in or going out of a business at any given time. And this is one of the issues on Shark Tank that we hear quite a bit is, a company might have $2 million in sales and they can't fill orders. Well, it's because they don't have as much money coming in that is going out to actually fill those orders, to make those purchases, to handle the marketing expenses, so on and so forth. So cash flow is the money that's coming in or going out of business at any given time. Helpful information for you guys as you guys are doing the accounting worksheet for today. Know that check is considered to be cash. Cash is always considered to be an asset. Anytime that we hear on account, that is going to be some type of credit transaction. So on account, it's going to either be a liability, which means you haven't paid for something that you bought, or accounts receivable is going to mean that you provided goods or services for a business and they have not paid you yet. So that is some type of credit transaction. 4 questions that we'll always ask in double entry accounting: what did you gain? What did you lose? Did you take on any debt? And did you pay down any debt? All right, your guys' job is to work on that worksheet, and I'll have the answers posted by the end of class for you guys. Good luck.